Hey, everybody, this is David Skrika. You know what? It's dark enough in here. We'll keep that little thing of me in the dark at the beginning. Now I don't have to start this over again. So we're going to stock chart of the day here. We're going to look at a couple things. First of all, usually I go with the chart, the macro chart, and then go to the company, but we're going to start with the company. So this is a company I own. I participate in the private placement. I help them raise money. I don't have right as of now. I don't have a current marketing agreement with them. I'm probably going to get one in the future. I've had one in the past. So this Carlisle CCC unfortunately has come off a little bit here, but I'm really liking what I'm seeing from the company. They're starting their drilling at their Newton project. I think this is the kind of company that would be taking off if gold hadn't retreated, yet again. But I think this gold correction is very short-term in nature, because I think once that first and second quarter starts, it's going to be obviously the economy slowing, the Fed is going to cut rates, etc. It's just the one employment report just sent everything back, and now we're like, it's December 12th. We're less than 2 weeks from Christmas. Essentially, if you look at back this way, we have a few things going on, So anyhow, that's basically it in terms of that. So Carlisle, they've already, so this project already has a pretty good size inferred resource, 861,000 ounces of gold and 4.6 million ounces of silver. I mean, it's a pretty good silver play too, right? With a cutoff of 0.63 grams per ton of gold and a 0.25 an average grade, and a cutoff grade of 0.25. So that's an inferred resource. You have to make that to proven and possible. So they're going to start this. They just closed another financing for 700 grand. So with the two past financings, they just closed. You're talking over $2 million in capital to drill here right now. So the stock has come back to around 12 cents a share. I'm not going to bore you with all the details, but this is like a big bulk tonnage type find that goes deep into the ground. So I'm really looking forward to that, So this is as well. It's been, depths of approximately 500, and it has holes and not exceeded 300 meters. So there's tons of room to expand this. So read the press release to see the size of the anomaly, the size of the play, et cetera, et cetera. I don't want to bore you with the details of that. So the stock has gone from about 8 cents. It went to near 20 again. It's come back to about 12. Most of you who got in the private placement got in around 8.5. So I really like this company going forward. And like I said, now they're starting the drilling. Last spring, they had excellent drill results, but of course the market was garbage. But I think if we can get some kind of move up in gold combined with good results, these are the kind of companies that can do well. So today's stock chart of the day is CPI. So CPI came in at 3.1%. This is lower than expected, or in line with expectations. You can see from the high of over 8%, and this is the core here. The core is about 4%. Core, went up to over 6%. We've come down. I think we may still go to 2.5% or so. And if we go to 2.5%, that probably gives the Fed the leeway to do the cuts that they want to do, from 5% to 3 or 3.5%. Meaning that they want to do, but will be able to do if that's the case. I think right now they want to keep, the real rate a few percent above inflation, or what the reporting inflation of that right now. So I still think, we've had oil prices come down. They were down a little more today. I still think that inflation will continue to move lower into probably the second or third quarter of next year, or at least flatten out. And then that's when they can start their cuts. And then inflation will probably have its secondary spike probably in 2025 or 2026, more likely. So that's what I'm kind of looking at. And midterm years are always dicey for markets. So and election years are usually good. I know they weren't that great in 2008, obviously, but 2004, 2012, 2016, 2020, even after the quick COVID crash, everything kind of came back. Usually election years are positive, and usually the Fed will be in election, because of powers that be have some sway, will be in a loosening cycle. Like you go look at the 70s, which were not great years for markets. The two midterm years, 72 and 70, Oh, no, sorry, there's election years. So yeah, the two election years, 72 and 76, were actually pretty good for markets, right? So that's it. So today's stock chart of the day is CPI, kind of coming down off these highs. I think probably going to now base a while, maybe go as low as 2.5% or a little lower before the next kind of move higher starts in 2025 into 2026. So I hope you enjoyed this, and thanks for joining in.